Hi everyone, and welcome to this afternoon session where we will be looking at what the markets are doing in the US, obviously, in particular the stock market. We'll be looking at some indices and we'll be looking at, I think, some commodities as well, but we'll see how the time, how we get on with time. As you know, we've not been around for a couple of weeks, I think more than a couple of weeks. We've just had a little bit of a break. It's those of you who trade regularly will know that it's a very, very intensive occupation, and it's really important that you just take a break sometimes and come back and refreshed. And we are refreshed. The only thing we're not terribly refreshed about is the webinar technology. We had a little bit of a difficulty this morning, but if you could just bear with us, that would be fantastic. I think you've just disconnected me, but doesn't matter, David. Okay, there we are. Yeah, have I? No. Yeah. And of course, we have to log into the correct version of NinjaTrader. Anyway, before we start, may I just draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. As always, we are going to be looking at a chart through the prism of volume price analysis. It's a methodology that David and I have used for, oh my goodness, it is 20 years now, if not more. It's all right. We'll sort ourselves out in a second. The basic concepts for the methodology are here on this book, which you can find on Amazon. And together with that book, we've actually produced one with lots of worked examples. Although this did make me laugh. Someone put a review up on the book that's called Investing and Trading, the companion book, and on the title it says 200 worked examples of volume price analysis, and they complained that it was full of worked examples, which we found a bit puzzling, because the beauty of volume price analysis is the patterns and the elements that make up VPA. They do repeat. They repeat in all time frames and across all markets. And once you, once you can identify them, you will recognize them, and it will really give you a heads up and a real advantage over your fellow traders. Anyway, there is a book there with the 200 worked examples, and the elements that make up VPA are volume, price action, candles, candle patterns, and support and resistance. I said this in this morning's webinar that what you're actually looking to achieve as a trader is you have to synthesize all these elements. Synthesis, and I had to sort of just see what the definition of synthesis is: the combination of components to form a connected whole. Now, we have to form a connected whole on the technical side, and then we have to look at the elements on the fundamental side. To do with stocks, we look at metrics, etc. And we also look at related markets and the broader, if you like, the big macro picture. Each on their own, they've got different components, and we learn to put them together, and then we make, we synthesize the whole thing to give us a bigger picture. Of course, when we start with the technical analysis, the chart analysis, and once you get to grips with these different components and what you're looking at and what you're recognizing, trust me, it will just become second nature. That is your foundation. And then on top of that, you can use, we use indicators, some standard, mostly our own that we have developed to support the methodology. A lot of them are volume based, and we're actually developing some more that are primarily driven by volume. And we also then apply this analysis, if you like, in multiple time frames. Do not use just one time frame. And once you look at our charts, then you'll see what we have up and running. You'll be able to recognize what I mean by that. So that's what we are going to do. Let me just move that out of the way. This is my NinjaTrader. I've actually got just NinjaTrader NinjaTrader today. David has, I think he's got TradingView, TradeStation as well. And essentially, I've brought it to 6 charts. If you were with us this morning on MT4, I tend to use 5, but I've got I've got 6 here, and I've got the minute, the 3 minute, the 10 minute, because
you need to reconnect.
Do I? Okay, I'll reconnect in a second. It's fine. I've been but that's fine. I've got 3 time frames at the bottom: 1, 3, and 10, and I've got the 1 hour chart, and I've got 2 Renko charts as well. Now, the reason for having these 3 at the bottom is we're talking about support and resistance, and one of the ways we look at support and resistance, we use price-based support and resistance, and we also look at volume-based support and resistance. And the volume-based support and resistance comes off the volume point of control, which is this hatch line here. This is, if you like, the value area of the chart. It's the fulcrum of the market, and it's when you will tend to see consolidation, congestion, and then we wait for the market to break in one direction or the other. Price-based is for Ninja, it's on our accumulation and distribution indicator. This is these hatch lines here, the red and the blue. And the beauty of this indicator is, if you notice, this line is, obviously it's red, but it's thicker than this blue line. And what that means is every time a certain a level is tested but doesn't go through, the line gets thicker and thicker. And what that tells you is it gives you the relative strength of that zone. So you know that when the price gets to, say, this red line, this red hatch line here, it's going to need a lot of volume. It's going to need some momentum to go through. What the VPOC also does, it puts in these lines here. Now they actually divide the high volume nodes and the low volume nodes. A high volume node is where you have a lot of dense volume, a lot of transacted volume. It's where price has spent, a reasonable amount of time. Then it cuts through, and through a low volume node, it doesn't spend a lot of time there, but it creates this sort of how can I put it? This what do you call that? What's that bell? Like a bell curve, as it were. When it reaches the differences between the low and the high, you will find price will get there, will go through more quickly. As you can see here, this is a high volume node because the volume histogram moves over to the left, but you get these points at which you either get the end, the top of the VPOC, which is here, and the bottom is down here. Now it hasn't actually painted a bottom on this time frame. We don't have one of these bands, if you like. That means that if it were to get there, the chances are it would go through. So we look at another time frame. But these bands within the VPOC itself are also support and resistance, but from a volume perspective, as we can see here, it'll pause, and generally speaking, it does actually bounce off. So we have a lot of information in terms of support and resistance. I'm not going to log on straight away, because before I go back to looking at this chart in more detail, I just want to carry through what here we are. This is what I want to do. Right. Those of you who have been coming along regularly will know we've been looking at different ways of being able to filter and sort for, this is stocks, to trade basically. And we've been using all sorts of free resources that are out there. We've looked at Finviz, we've looked at Market Beat, we've looked at stock charts, we've looked at bar charts. And one of the things, so I've gone back to Finviz. During this break, we've been looking at, I've been revisiting some of the stuff that we did before the break, and I went back to Finviz and I thought, right, well, how can I simplify this, and what can it tell us doing a search? So what I've done is logged on to Finviz. I don't pay. This is the free version, hence that's why you've got the ads at the top for food. God, Lord knows where I've been searching today. Anyway, and I've kept it really, really simple. What I've done is I've looked at average volume over a million. You've got all sorts, you can select the parameters. Obviously, if you go for a lower figure, you will get many, many more results. But 1 million it's, don't ask me, I can't even give you a reason for it. It's just that for I suppose the reason is you want something with liquidity, and this is going to filter a lot of those very whizzy stocks, stocks that move, perhaps a lot of penny stocks, but they're very, very volatile. And I know they're very, they're very seductive because they move. Sometimes, when you start, I think, start with something that's a little bit more measured before you go to, something that really does whiz around. So I've taken a million, but you can play around with the value yourself, and you see what the, what the result is. Then this is an important number. This is the relative volume. So, okay, we've got a million, but actually, if a million is the kind of average that they do, well, yeah, but they could be in consolidation. They're just sort of, going backwards and forwards. Nothing is really happening. What we really want is we want to see that they're actually doing more than their average, and that is the relative, and that's about 1.5. I've gone for 1.5, and exact and the same. You can put in all these values, and by putting the different values in, you will get different results. So I've just taken and let me take the energy out. I actually go for any, first of all, and you can see here, yesterday I got something like 8 pages. Today I've got 15 pages, but that's manageable when you're doing an initial filter, as it were. So I did this, I stuck it like that, just to give you an example. So if you were to go over 2, for example, you see that cuts it back even more. And if you go over 3, you cut it down. If you go the other way, you go over, let's say over 1, you get 29. So, it's excuse the pun, but it's all relative. 1.5, it's a manageable amount of number of charts to be able to look at. Then what we said, previous times is we literally just go, and the nice thing about Finviz, you can literally just go through and you look at what is the pattern, and this is where your kind of synthesis comes in. With VPA, we're looking at price action, we're looking at volume, we're looking at patterns, candles and candle patterns, and we're looking at kind of support and resistance. I know we haven't got support and resistance here, but what this does is give us the patterns. And one of the patterns that I really, really like, and David likes, and you have to be a little bit patient, and sometimes they take a long time to develop, but when they develop, boy oh boy, they can give you some really nice trading opportunities. So what you do is you build up like a watch list, as it were, and this is the pattern which I, having looked at so many patterns, and those of you who know Bukowski's book on candlesticks and patterns, he has, I don't know how many patterns, and he's tested them all, back tested them, and he can give you the actual number percentage that they work and don't work. But when you're starting, and as a quick, as an identifier, and you can really pick it up straight away, the saucer, this extended accumulation phase that you get, particularly after a stock has had there's been a lot of maybe a pump and dump, and it's been pump dump, then it's crashed down, and then it goes back into a long phase of accumulation, and awaiting its time for when it's ready to move higher. And this is a really nice example. AEI. You can see here, we can see back in July we had a gap down, it doesn't do anything, and now slowly you can see the volume coming in, it's kind of going to go up. So that could possibly be one to look at, and look at the, we know it's doing over a million, at least a million. What did it do? It did 2.5 million yesterday. It's in real estate, okay, no, sorry, it did 5 million. 5.4 million. So that's a lot of volume for a stock that's what is it, $3.54. But what you want is you actually want to get in not when it's already gone shooting up, but actually at a point where you think, do you know what, I think this is maybe going to start going higher. And the only way you will know that is through the prism of volume. So you basically work your way through that. Now, when I worked my way through this this filter, the most interesting thing that came out was, in all the ones that I looked at, the energy stocks were very much to the fore, and they were, you know, for example, Canberra Energy, we're talking 77 million, and we look at and this is what I mean. Can you see I can't move my cursor because I will lose the chart, but you can see the consolidation. It's been going, you know, drifting lower. Suddenly, you know, not suddenly, but look before it's really took off. You can see, you know, the volume is starting to creep up, and then it starts to go. I mean, it's 40 cents for goodness sake, you know, and off it goes. But the most interesting thing about this this filtering that I did is the number of uranium stocks that came in. Now, I know some of them are in Canada, which, you know, you may not be able to trade on your platform, but there were where's it gone? It's disappeared now. Hold on. Yeah, there we are. There's one on this one. There was this one, 3. That one, which is what I had on my NinjaTrader. And if you look at the pattern on the what you don't have so much a sort of long saucer accumulation. What you have is like a double bottom. So clearly there has been some buying, and it's been buying going back to the middle of August, and it's gone into a really, really nice trend. And I thought, well, this is unusual, you know, given the general consensus about nuclear and what have you. Well, why have uranium, you know, why the sudden interest in uranium? Again, URG, you can see there, it's, you know, just moving sideways, and now it's actually broken out. It's gone from $1, it's up to $1.99. I haven't looked at what their beta is. I haven't looked at their ATR. I'm just looking at patterns and trying to, you know, what you want to do is obviously spot them before they get to the level they are at the moment, because you want to take advantage of that run. You don't want to be, you know, at that, at the point where they've actually made this move. We want to try and capture them before, and I believe that is the way that you can do this, simply by looking at this kind of pattern and just keeping an eye on it. You have to be, you know, you have to, I can't think of it to do this automatically. You have to do it by eye, and as I said, Finviz is a fantastic way to do it. Now, to get back to uranium, it was a bit of a puzzle, and I thought, you know, what's happening? So I did the usual Google, you know, why are uranium stocks suddenly in high demand? And according to Bloomberg, they've been rising since last year. Well, clearly they haven't, because, you know, what chart is Bloomberg looking at? Because they've been in a long consolidation, and now they're going up. And one of the reasons they have been given is because our friends over at Wall Street Bets have sort of taken them on board, as it were, and have been maybe, you know, pumping them up. I looked at them at the means, see what stocks have, you know, are being talked about and mentioned, as it were. The numbers are quite small, actually. Certainly not the big numbers that we were seeing at the height of the craze, if you like, for GameStop and BB and Clover and etc. etc. But it's interesting, you know. I don't know how true that is, whether the you know, our trader activist friends are actually the drivers behind the interest in these stocks. But, you know, that's just another way of using Finviz. I'm I've got so much that I really want to cover today, but I can actually cover in subsequent webinars, and I've listed all the stocks that I've been keeping an eye on. Those of you who come along regularly will know this is the one that BTX, Brooklyn Immunotherapeutics. This is what we've called one of our fallen angels. As we can see here, we had a lovely, really nice pump and dump. This was, let me just, there we are. This is what I mean. Here we have a long period of accumulation, this huge, you know, this, I call it pump and dump, then the crash lower, and we're back in accumulation. I actually think this one is one to watch for the longer term. And, you know, people are stuck up here at $80 and it's now at $12. It's wicked. Pump and dump is absolutely wicked. But as a trader, if you see this happening, by all means, take advantage of it. But if you're an investor, please don't jump in up here, because, you know, that at that point, it's like, you know, FOMO kicks in, as it were. I'm expecting with the uranium ones, I wouldn't be surprised if we see the similar sort of pattern. The mere fact that it's now being, these stocks are being mentioned in the press, as it were, when they've done most of their moves, it's classic. It's a classic use of media. Stocks have been going up in the background. Nobody's really paid much attention to them. Suddenly, when they get to you know, these dizzying, oh gosh, it's going to go high. Sometimes they do. You know, let's be honest, they do. But in reality, no. Down it comes, back in there, and then we have possibly another way. So keeping an eye on that one. This was one of the others that I picked off. This was on using on double, but I'll come back to these as we revisit these in the following weeks. The one I wanted to mention was ABBV, because I read in the some of one of the sites that I use that this was a great buy. And you know, there's a lot of, you know, positive things about this stock. I think the reason we had this crashing fall, there's also a volatility candle here as well, is it was something to do with the FDA, and the ABV is, it's a pharma stock. And what you have to watch with any stock is you have to do a kind of risk assessment on them and think, right, well, what are the factors that could possibly come out of the blue that is going to affect, you know, it could be rising nicely. I mean, look at that. There's absolutely nothing wrong with that. It was going sideways, you know, it's just ticking up, not doing any, not bothering too many people. And suddenly, wham, it was, I believe it was to do with one of their drugs and the FDA. So you really need to know your stock and do a risk assessment and think, what are the factors that are likely to cause a problem with this stock? Now, is this a buy yet? I would say, I haven't, when I put it on our NinjaTrader, perhaps David can do that for me, that is a volatility candle. What that means is it's that price action was outside the average true range, clearly, because of the size of the candle. It's also got a massive wick to the bottom. So clearly there were lots of dip buyers in there because it's a very respectable stock. People who are looking to buy this stock, they said, okay, it's gone from 122 right down to 106. Perhaps in their view, it's good value, fair value. That's what they're looking, you know, that's where maybe they were looking to move, to get into. They buy, what does it do? It carries on lower. The key level for this stock is the bottom of the low of the volatility candle. If it breaks through the low of the volatility candle, it will go down to here, to this last big congestion phase that we have here, which is down at, it's only down to 102. Let me just close it down even further. No, that's about it. So we'll have to wait and see. But the key to this is the low of the volatility candle. It may simply just congest and just carry on sideways and not really do anything. From a fundamental perspective, apparently it's got lots of things going for it. So, you know, that's fine. But you could have the best stock in the world from a fundamental perspective, but the market makers say it's not going anywhere. It ain't going anywhere. You know, on paper it could have anything going for it, but the chart doesn't match that. You have to look at what the chart is saying. Now AHT is even more interesting. Again, this was one that I picked out weeks and weeks ago, really back in end of June, July, because it was a really nice example of, you know, going up nicely. And I think on Finviz, there was something about options on there, using the options market. It then had this, as I said, this pullback, not really managing to reverse lower. The volume under the up candles, particularly this one here, really look at it. It's not very clever, and in fact David will go through the indices at the moment, and this is what we're seeing at the moment. The indices are kind of rolling over, but they're not rolling over, you know, in a big way. It's a bit like the weather. We haven't got a hurricane in the market at the moment, but it doesn't look very encouraging when the rallies, the dip buyers are coming in, but the rallies aren't really pushing the price higher, and they kind of got a meh look about it. But this one is quite important because underneath there, yeah, it was an up day, but it really wasn't enough to reverse that, and it carried on lower. Then we had two more. A reasonable amount of volume under that one, but the key is this one where you had more volume than you saw under this candle, but it's a narrower spread. So if that was, you know, genuine, you must have the spread of the candle must be in agreement with the volume underneath it. And then and then suddenly we had this break lower, and I thought, my goodness, there was no news. And what it was, which is curious, there was a stock split. Now normally stock splits are quite, you know, they don't usually have this kind of effect. And what it apparently it had gone down to 40, and I don't quite understand it, but it's they were concerned that in the price falling, for funds to hold stocks, it mustn't be more. They must be more than $5. They must be valued at more than $5. Well, if they thought the stock split was going to reverse the fall, they've sadly mistaken, because it's all the way down to $14. And again, really not looking terribly happy. This is a different kind of risk assessment. It's, you know, again, you just have to, you know, they were down. It was a reverse stock split, sorry. So it was a real shock to the market. Stuff like that happens. We just have to, as traders, we have to suck it up basically, and have a stop loss in place so that, you know, yeah, we'll get taken out, and that's it. This is Canberra Energy. This is one of those stocks that we picked out in Finviz. Again, a pump and dump. I know it's only $3, but it's relative, you know, whether it's $80 or $3, you know, up and up it goes, then bang. Volatility count. The volatility indicator, it will get you out and of so many difficult situations. I can't tell you. And down, down, down it goes along, you know, going nowhere. And then this is the point where you want to see. You want to see some candles here. There's some buying coming in here. I know it didn't go very far, but neither did the down candles. Then we had, yeah, we've got a little candle there, which is a compressed candle with volume underneath it. But if that was big selling, you would have a much wider candle. It doesn't seem to do very much. And then gradually what you want to see is this. This is the point you want to see on these charts, when they just start to move up and then bang. And then you want to stay in for as long as possible and watch out for the volatility, and then you're out, unless you like to go short. That's my view on it. But given that, you know, stocks, traders and investors, the bias is nearly always to the long side. This was another one, Uranium Energy, very much not quite so clear cut as the other one, except I would say you have a sort of double bottom there, and you've also got the support that goes all the way. This is much more like it's a much more regular looking stock than the previous one. But again, you have this increase in volume, and even if you looked at this point here, you've still gone from 247 all the way to 374. You're now looking to clear the top of this candle, which I suspect is another volatility candle. Volatility candles will give you another point of resistance and support, and for you to, targets to aim at. But it looks like uranium stocks, there's quite a lot of there's some profit taking coming in, and this is the one that as I said, very similar to the previous one, where I saw this double bottom here. You've got this a support up here, and again you've got this rise in volume coming up. And also we have a very nice little hammer candle here, can you see, with lots and lots of volume underneath it. So that's encouraging. You wouldn't go off that one signal, and you would say, yep, it's one to watch. Then it goes up, possibly once it clears this this resistance line here. But hey, you've gone from 551 and you're up at 805. Really nice day yesterday. Bit of a pullback today, but it looks like the dip buyers are in again, and that's the one that I have on my NinjaTrader. I'm just going to log on again, and then I will pass over to David. Here we are. That's all right, cutting me off. All right, if you've got any questions, then please just put them into the chat box. We're happy to answer them for you. Where are we? Right. Oh, I don't know. There's all sorts of weird things coming on. Am I moving yet? I'm not sure actually. Can I leave this one to you, David, maybe? Because it's not loading up. Sometimes we've been swapping. It's not. No, it doesn't like it. Oh, here we are. That's all right. Hold on. I'll move it. Oh, there we are. We're back. Yeah, we're back. There's all sorts of things, right? Okay, I suspect with this stock, it's had such a nice run up that it, there will be some profit taking. Move that out of the way. And what happened, if I just use the 3 minutes chart, which is actually quite a nice chart. So that was yesterday. That was this was the run up yesterday, and this is today. And immediately we went straight down. We actually went down to the S4 of the Camarilla indicator. We actually have 6 levels for Camarilla. The most important of the third level and the 4th level, and we also, as I said, we have the support from the volume point of control. There's quite a lot of volatility at the open for this particular stock. As I said, it's had a really nice run up. I still think it's very positive, and I think there's potentially some more upside to it. The whole uranium market still looks positive. This is where the buying has come in. You've got to look at these volume bars this has all been distorted by, as I said, I strongly suspect that this is a profit taking, and also shaking out a lot of the longs. There'll be a lot of people long on this stock, and it's a great way, just whack it down. There'll be stops all the way down here. Take out the stops, take it down a little bit more, and now we're going to start going up. And what the levels do, both the volume levels and the price-based levels, they're now going to give us some objectives, some targets. And the first one is certainly the volume point of control back at 825. These are today's levels, and really then we're going to be looking at this resistance level here. We can see this quite a thick line, as I mentioned earlier. I mean, it held, it prevented sort of the rise from yesterday. So looking back on the day on this chart, you would think, you know what, it didn't really manage to get through that. Perhaps it was going to maybe struggle at the open, and it certainly did. And it also hit the volume resistance up here. And if it does manage to get through there, then I would certainly be targeting the third level, which is the R3. And what's happened with the VPOC, it's a bit like volume at price. You will find the volume building and building, and the histogram will get fatter and fatter. If that exceeds that we see there, then the VPOC will move down here. And depending where it moves and where it is on these candles, it will either act as support or it will act as yet more resistance and driving it down. Got a change of direction on the trend monitor, but you know, markets fall so much quicker than they rise. When they go up, it's always a little bit of a grind. Now this indicator down here, again, David's going to show you a little bit more detail. What we want to try and gauge is what is the speed, what is the we know there's momentum here because the volatility indicator was triggered. These are the two arrows, so we know this, and we look at the volume that came in and it turns green as well. It tells us how, you know, the activity, the level of activity, the not the number of, in terms of a numerical amount of volume, but just whether it's the noise of the market. You know, we always use the analogy back in the day when traders were in pits. If the pit was noisy and there was a cacophony, you knew the market was moving and everyone was busy. But when it was quiet, there ain't much going on and it was a bit desultory. Well, this is what this indicator does. So when it's in red, it's kind of, yeah, there's stuff going on, but there's not a lot going, you know, they're not going on. When it's orange, it's like a traffic light system. Yeah, things are picking up a little bit. Doesn't mean things don't move. It's just they're a little bit, it could be a little bit sluggish. But when they're green, you know, activities going on. Some, you know, volume, if the volume bars are repeated, you know the volume is going in and it is going to push that price either up or down. So that's the 3-minute chart. The 10-minute chart has the same values, but what the 10-minute chart tells us is we're already over the volume point of control, which is good, and any resistance that it meets here on this particular chart, it's going to hit all this resistance, all this congestion that's here. So if it's going to go higher, I would love it to go up to here, but it has got a bit of a, it's got a bit of an effort to go through. Now on the hour, I just take the hour. Now the difference between this and the levels on this is the levels that are given here. These are valid for the week, and what we've already seen, because this has had a really nice move higher, we've actually chewed through our 6th level. So what we use them for is possibly for any reversal, and we use the daily ones now to tell us, you know, if it's going to track higher. And you can see already that's the tail at the bottom of this candle, and you can see the volume that's going in. So yes, we had some profit taking and the opportunity to take out some longs, and we'll see what happens for the rest of the day. And the synthesis for this particular chart has been the overall look of the longer the time frame chart. In this case, sorry, it was the 60-minute chart, but the daily we've seen it's been in a nice uptrend. So that's the first thing. What's the price action on there? Where are we in the price cycle? What is the volume telling us? Well, we looked at the volume on Finviz, and we know this is, you know, this is quite a heavily traded stock. That's what are the candles that we're looking at, what are the candle patterns, and what is the support and resistance, and we put that all together. I haven't looked at the other elements to do with the stock. Let's have a look. Just have it quickly. Let's just to double check, because I said I didn't. There we are here, and what we can do here, like we always do, just quickly do a profile. This is what I'm saying. These are all free resources, so you don't have to pay for anything, but just go in and it just gives you some background on the stock that you are looking at. The two the two tabs that I would keep, well, 3 actually. First of all, look at earnings and see if you are going to be running into, you know, an earnings tomorrow or whenever. When is the next one? And the next one is not till October, so we're fine on that one because all sorts of things happen around there. What we then want to look is the short interest. Is this heavily shorted? What's the short interest? Well, there's actually quite high short interest in this. So the short percentage of float is over 8, it's almost 9%. Now that tells us that the hedge funds are in there, and what we could be seeing at the moment is those wonderful people at Wall Street Bets actually, acting out another bit of a short squeeze. Now, so because that is that's a pretty high percentage, and I think those guys over there and girls as well, I think they got the measure of how this market works, and good luck to them. So there's that. If you want to have a look at the options chain, I didn't know if this was optionable. Yeah, you can just see these are weekly options on the 17th. What are the calls? Are they looking, call is all calls? Are there any puts on here? No, it doesn't look like it. So as I said, so all that combination, and you can glean all that information for free. It's part of your synthesis. You've got to look around for it. I haven't even a paid service. I haven't really found anything that kind of puts it all together, because David and I have put this together ourselves. This is what we think you should be looking at, and it's what we're thinking. What we are going to be doing is we are going to be putting together a little program for stock trading and investing with the VPA, and with all these elements that we feel are really important to that we believe you should know, and to make obviously life a lot easier for you. Now I have tons of other stuff that I could say, but I don't want to bore you. So I'm going to stop there for the time being. Just a couple of things you might like to consider. Just talking about the markets generally, these are quite extraordinary numbers. The IWM, which is the ETF for the Russell 2000, we talk about related markets, and clearly we look at what's going on in the indices. That everyone looks at the NASDAQ and the YM and the ES. Are they up? Are they down? Well, they're not doing very. But there is another index which is really, really important, and that is the Russell 2000. This is really the speculators index. People invest in this index through the IWM because this is where the next Apple will be. This is where the next Facebook could be. This is where the next big things. So it's very much a speculation index. And what we can see is it's been in this really this massive sort of sideways range bound price action. On a daily basis it's fine. One day it's up, next day it's up, then it's down, then it doesn't do very much. Fine as a trader, but as an investor it's quite interesting, because on Wednesday there was, out of the IWM, which is the ETF for this, there was $1 billion in outflow. $1 billion. Now that's just another one of those metrics that tells us, we've been saying these markets are fragile since June, July. Markets can stay irrational for an awful long time. It's just one of those bits of information that, we just need to keep in the back of our mind. There's other bits and pieces that I've got, but I'll save that for next time. So thanks so much for listening to me, and I will pass over to David.
Hi everybody, hopefully you can see my screen. I'm on NinjaTrader as well. Let's just start. There's quite a lot going on. No, I'm okay. I'm okay. We have a couple of feeds which have different markets on them, but no, this is fine for this one. This is basically, as Anna said, the three sisters, as they're often referred to, or the three primary US markets, three indices. The YM, which is the future for the Dow, the NQ, which is the future for the NASDAQ 100, and top right is the ES, which is the future for the S&P 500. And as you can see, a lot of red today. Very fragile. Let's have a quick look at the daily charts below. We've written about this extensively over the last few weeks. This is not looking great. It's all looking very fragile. The moves to the upside are relatively weak and really lack, what's the word? Not motivation. They lack a sense of momentum. There is really, it's a sort of lackluster move. Yeah, Anna said everyone's bored. I think it's just the markets are now in a very fragile state. The YM, as you can see here, we're on the VPOC on the daily. We've had just a whole string of reversals day after day, one day up, one day down. Really not very positive at all. Same thing on the NQ. The NQ is slightly different. The NQ has been leading the way for the past 18 months, couple of years, really. But even that, this flattening of spreads I mentioned at the time, last time we were on air, you get these flattening of spreads. That in itself is enough to signal a real lack of interest, a lack of desire for risk on, a nervousness, and you're going to see that more and more. And we're flattening off, lots of volume going in and really not going anywhere, which is also obviously a signal in itself. And finally, down to the ES on the daily, pretty similar sort of picture. Big surge in volume the other day, a doji candle coming in again, really no desire to move higher. We had a rally yesterday, but today, looks like it's going to end as a down day. That's really where we are. And of course, that's all signaled on the 5 minutes at the top. This is on the YM. Nice move there. Nice trap move at the open. This is 14:30. This is our time. Is what we expect to see. Nice trap, drawing everyone in. As Anna said, pump and dump. It's pump and dump on a small scale, if you like. It's the way the big operators and the market makers work. Trap everybody into a move. Nice volatility trigger, nice volatility candle. What are we expecting? Oh, everyone's going to jump in, go long, and the market's going high. No, it isn't. It just rolls over and reverses, and a whole string of volatility to follow. And on down we go, down to this low volume node here. Trend monitor's bright red. And the volume is pretty weak on any sort of up reversals into the downtrend. Let's have a look at the NQ, see if that's reflected. Pretty much the same. Volatility at the open, it's what we always expect to see. Now we're trading around the VPOC. So it's a question of being patient, waiting. We've got a nice level of resistance above here. Very little in the way of price-based support or indeed volume-based support to the downside. Volume falls away dramatically here down to 360, 365, and minor price support. This has been tested once on the accumulation distribution indicator, as indeed has this level. So very, very minor. That's in complete contrast to what we've got up here. Look at the strength of these up here. Is it any surprise the price just ran into there and hit the buffers? These are extremely strong levels. These have been tested multiple times. This is the power of the accumulation distribution indicator. It gives you these visually. It gives you an instant picture. You don't have to know what the numbers are because the width of the lines widens according to the number of times it's been tested. So the wider the line, the stronger that level. So we had one level here and another level immediately above it. And if you put two of those together, that's a hugely strong level of price-based resistance. So for any market to penetrate through that, it's got to be seen with good volume. The upside of any move to beyond that level, of course, is that then volume falls away dramatically. We have this nice low volume node up here. So if it does manage to return up here and get through here, then you've got two things going for you. You've got a really nice platform of then potential support in place, and you've got a low volume region up here. So you know for a fact, once it gets through there, the market is really going to ping 30 or 40 points up here without any difficulty whatsoever before it gets to this little minor level here. And that's really the way to look at a chart. You're looking all the aspects, multiple time frames, and so on and so forth. As you can see, trend monitor is bright red in evidence. It's what we expect to see across the piece. If we go over onto the multiple time frames, and I think I've got the YM set up here. Yeah, there we go. Really nice move, pretty straightforward. This is not, not frightening trading. This is just jumping on a trend, riding the trend. As always, a trend lower is going to go much quicker than a trend higher. It's why I have a bias to the short side. Probably about 70 or 80% of my trades to the short side, not the long side. Simple as that, for that simple reason. I enjoy trading a faster moving market than one that is trying to rally, and rallying markets generally move more slowly. It's something I'm conscious of. You may well be the same. You can see here, just a very simple example. This is, I've got 15-second, 1 minute, 3 minute, 5 minute, 10 minutes, so 15 minutes. So we really are down at the scalping end of the trading range. Nice little move here, rising volume, falling price. It's what we want to see. And on this last candle, little bit of a wick to the lower body, decent volume under that one. So yeah, there's some buyers have stepped in there. Is it enough to reverse this trend? Certainly not on one candle like that. That's it's not going to happen. It doesn't happen that way. And I'll show you on gold, which is also another. We've had some great trades on gold today, really fast moving, and I've got cryptos over here as well. Let's just pick out one or two other things if I can on this. Just see where we are. I mean, this is 15-second. This is, real out and out scalping territory. But the same principles apply exactly. You've got this move lower here. You've got generally rising volume with it, which is fine. That's what you want to see. You want to see rising volume in a falling market, because we're all familiar with the market rising, needing rising volume. But in a falling market, you need to see rising volume too. It needs effort. A falling market needs just as much effort to help it fall, in other words, selling pressure, as does a rising market. Then we got this little candle here, a little bit of increase in volume there. So we know we've got some buyers stepped in there. We had a little rally, but the volume fell away. So it wasn't going very far. Let's just see what the next one does. We've got 2 up candles and we've got 2 volume bars rising with it. So yeah, there's a little bit of positivity there. We've got a little bit of price-based support, and we've got some volume-based support here as well. But that's on a 15-second chart. But the principles are exactly the same. It doesn't matter what you're looking at, whether you're looking at a daily chart or an hourly chart, whatever it is, the principles are exactly the same. Just want to show you gold, because that really has been moving like a train. Let's hop over onto the gold chart, again to the downside, starting to find some upside momentum now, and I'll show you why. Let's just have a look at the 10-minute, probably good as any. There we go. That's what you call a price waterfall. Really nice trading. I know a couple of the guys in the VPA room have been trading gold this afternoon, making a load of money on it. Not surprised. Went through all these price levels, through this one, through that one, through this one. Then we come down to this next really strong level. And as soon as that's breached, that's it. We're down into a low volume region here. Go through that pretty quickly, because that's what you expect. You expect the market to move through low volume regions pretty quickly, because volume is not acting as a support mechanism in exactly the same way as price does. So once we're through here, fantastic, we've got low volume, another low volume node here, went through that pretty quickly. Then we get a little bit of heavier volume and it slows down somewhat. Then we start to approach the volume point of control. Now we're building volume out here. And what do we also see here? We start to see stopping volume coming in. We've actually got the highest volume here of the entire session, or certainly from this period here. Where have we got it? Under here. So we know for a fact we've got a wick there, lots of volume coming in. Does that mean this market is just going to reverse and give us a nice trade to the upside? It's very unlikely. It happens, but it's unusual. We've seen V-shaped rallies, certainly from a daily perspective, on some of the major US indices from time to time, where you get a very sharp waterfall of 3, 4, 5 candles, and then the market literally rebounds over the next 3, 4, 5 days in a V-shaped formation. It happens, but as I say, the norm, what we expect to see, as I was alluding to on the last charts with the YM there, was this is what you expect to see. We see the buying coming in here on the 5-minute. Yeah, the trend monitor is still red, that's fine. We see the buying coming in, lots of volume under there. So we know some buyers have stepped in. This is stopping volume. Basically, we are stopping this lot from falling further, which takes effort. And the effort that's required is not generally enough in one candle or one attempt, if you like, to reverse what has been some heavy, heavy selling. Because the sellers are in here, they're still thinking, yeah, this is going to go short longer, I'm going to sell, sell, sell. What we're actually seeing here now is we're seeing the selling starting to dry up. You can see it here, the volume is falling away. I mean, you only have to compare this volume here with this suite of price action with the amount of volume we had here. So basically, this area here is really trading in pretty much the same area as here. And yet over here, we had a ton of volume. And over here, we have very lightweight volume. So what it's telling you is that the selling pressure is diminishing. It is draining away. The sellers are moving away. They're starting to get a little bit nervous in terms of, whether this move is actually going to continue lower. The fact we're at the volume point of control tells us we're going to see congestion anyway. And then it's a question of looking at the volume and seeing more buying coming. Typically what you'll see a candle like that. You have a little rally, maybe on weakness. The volume's falling away here. Then it'll come back down again. Then you get another plunge maybe. Then you get some more buying coming in, but not so strong as this one. The volume might be half that. And then maybe you get a third attempt at that. And it's basically the analogy we use in the program, which applies universally, whether you're trading gold or forex, whatever it may be, is that of a sponge. It's very rare when you try and mop up a spill, for example, that you get it at the first attempt. You have to go back, you have to wring the mop out or the sponge, whatever it is. You come back over it again, maybe the third time, maybe the fourth time, and that's it, and the spill is cleared up. It's precisely the same principle here. It is mopping up, it's what we call mopping up pressure, or mopping up but the initial is the stopping volume that comes in to actually put the brakes on to that move. And it's the oil tanker scenario analogy, where the oil tanker, if you switch the engines off an oil tanker full of oil, the momentum will carry that ship on for miles under its own weight. And it's pretty much the same principle here. So it's shaping up to a potential reversal. Are you brave enough to take that reversal? That depends on your risk sentiment and how much you're prepared to risk. You will have to set a wider stop loss, but you're already starting to see it, because on the 15-second here, we're already starting. That's well underway. The scalping traders will have already made some money in here to the long side, because they will have jumped in where, I don't know, maybe coming out of this congestion phase. Some of the braver ones might have jumped in here somewhere. Who knows? But the fact of the matter is we've got a nice move going, getting up to the top here, so probably going to see a bit of a pause point at that level, but it's a really nice move underway. Let's go up to the 1 minute. It's happening on the 1 minute. Let's just scale that back a bit so we get a bit better definition on the volume. There we go. So here we are. We've got 3 candles and rising volume, which is nice to see. Getting up to the top of the VPOC again, so maybe we're going to see a pause point there too. Let's go up to the 3 minute. It's happening on the 3 minute, just starting to move away. What's nice with the 3 minute is we've got a nice little low volume node in here. Doesn't cover much in terms of price range. It's only, what, $2 an ounce there, 58 to 60. But nevertheless, it's nice to see when you come up to a level like that, because it's not going to take so much effort to push through that region. The trend monitor here, you can see it's been flip-flopping around. It's come out of bright red. It's starting to signal, yeah, maybe, we're starting to see some move here, and now we're starting to see it transition into blue. So you're starting to see the ripple effect here of blue, blue, a little bit of blue. Nothing changed yet down on 5, you wouldn't expect it, and certainly nothing down on 10. That's the daily, and that's the little wick that's forming there. So it's just a gold at the moment. Really nice example, strong downtrend. See the stopping volume coming in, looking for the reversal. Is it strong enough? Am I comfortable taking, jumping in and taking a trade to the upside after that big down sell? It's all down to the chart and multiple time frames and using the indicators. Down the left-hand side here, I've got the time and sales going through, so you can see the actual orders coming through as they're executed. And what you're looking for here is not these noise level of numbers. What you're looking for is big numbers, 20s, 30s, 40s, even up to 50, 100 sometimes. And you want to see those blocks moving through and how the market reacts to those blocks. This is noise level, but everything else that's, beyond 20, 30, 40, that's serious contract size. And it's how the market then absorbs that contract size, that block of contracts, and then reacts accordingly, which is important. And that's what you're looking for. I love the 15-second chart. I use that a great deal because I'm often on the 1 minute and the 3 minute, the 15-second. And the other thing I will also say, you might not want to trade a 15-second chart ever, but it will also it will hone your VPA skills enormously. We have it on NinjaTrader, you have it on TradingView, you have it on TradeStation, sub-seconds, and you don't have it on MT45. But if you can find a second chart like this, 15, 30 seconds, whatever it may be, and you want to hone your skills, it's a great way to do it. Just practice, practice, practice. So there we are, that little rally's going on. What are we waiting for now? A little bit of weakness came in there. We had a little pivot at the top. Want to see it move through this 1758 area and then on upwards if it's going to continue. Selling's falling away there, which is nice. That's a little bit of weakness coming on that particular candle. A little bit of a flat candle there. So, again, it's not particularly strong. Narrow spreads, I said, spreads tell you a lot. Combined with volume, they tell you everything. Very quickly whiz around the Western markets. Excuse me, just one moment. Just going to switch off for a moment. Sorry, I had a frog in my throat. Where are we? Oh, I haven't got copper up. Silver, similar picture on silver as you would expect. Big sell on the day. It's just the nature that gold and silver they don't always mirror one another precisely, but generally speaking, they will move in the same sort of orbit of up and down. Not to the same extent, but generally the same sort of trajectory of. There we go. That's what we saw on the move lower for silver as well. Just drop down onto oil. Let's a quick look at oil. There we go. We're bullish on oil, have been for a while. Just pop that up full size. That's the daily chart. There we go. Coming up to this level again, $73, $74 a barrel. Nice up day yesterday. Expecting to see it go up to 74, 75, probably 75, 76, and at 76 we're probably going to see it topping out again in the same way that it has done before. And just very quickly, I think the softs, I've got the softs up, can't remember now. Very quickly onto stocks. What have I got here? This is Caterpillar. They've had up, and as Anna said, running the tick speedometer underneath it all the time, it just gives you this area here. You can see we went into the congestion phase. It goes red. We're in slow. There's no activity. The tick count is low. There's really no desire to move. And as soon as we move out of those red areas and we start to see the orange and yellow coming in, that is good news, because that is giving us a signal that the market is actually going to be moving. We've got the trend monitor on there as well. It's just a great way. It's a different way to trade stocks, and it's a different way of using the tick speedometer. Just let's drop that out. Let's just pull this over, just show you what's going on in terms of cryptos. This is the cryptocurrency. This is on 5 minutes. The nice thing with the cryptocurrencies is with this, the cryptocurrency strength indicator, all the cryptocurrencies will tend to move together. This is Tether. This is basically what they are based against. So the red line is Tether. Everything else is one of the cryptocurrency pairs. And it just gives you a really visual, strong indication of what is going on in the crypto market, as I say, because they generally move en masse. It's very rare to see an individual cryptocurrency break away from the others. So from a trading perspective, what you're looking at, this is the new radar panel that we've got on TradingView. It just gives you a really nice perspective, both from the CCSI and also in terms of the radar panel, what is going on across the cryptocurrencies. The other aspect, of course, of trading anything at the moment, and indeed any market you care to name, is looking at the VIX. This is what the VIX is doing. This is on 5 at the moment. We've seen it climbing. It's been quite volatile. It's still trading down at 19. It's not signaling that there's a big crash coming. But all I can tell you is that given let's go back onto the multiple charts again just before we wrap up. There we go. Oh, sorry, that's on multiple Renko. Great way to trade on any chart, but on any of these indices using multiple Renkos like this. It's fantastic. I've got the 15 second, 30 second, and 1 minute, and then above I have the 3 Renkos running the equivalent. So it really gives you a wonderful smoothing of what is going on in terms of the price action. Sorry, I meant to go back to the time-based. Where are we? There we go. That's where we are, YM. not looking terribly healthy, all looking, you know, slightly sick at the moment, and you know, it's pretty much what we're going to see. There is a big crash coming. It's not coming yet, but rest assured, given the price action we've got and the level, the extent of the bullish trend we've had, it is on the way for sure. Anna says maybe next week. I think it's probably a bit possibly. I think maybe we're going to get a reaction next week, but the major top is not yet in, which we will see in due course. This is where you'll find all the indicators. Yes, I agree to that. Go away. There we are. Over at quantumtrading.com, MT45, NinjaTrader 78, TradingView, and TradeStation. As I said this morning, we've completed all the work on TradingView. So if you have the full package of TradingView indicators, you will get radar panel. You should have also the CCSI and all the other indicators as well. And that applies to all the other platforms too. If you're a full package customer, you will get all indicators we develop in the future free of charge. We've done it from day one. We will do it till, as I said, hell freezes over this morning. That's it. It's just the way we work. It's just our way of saying thank you. Our development team are now fully occupied on NinjaTrader 7 and 8. Basically there we are developing the market analyzer to give us all the radar panel type options that we want with all the indicators, because it gives us flexibility to scan very quickly. So we're developing everything there. We will also be developing some new volume-based indicators for NinjaTrader 2, because that's where we are primarily going to focus on terms of stocks, in terms of the stock program next year. So we're really building it up on NinjaTrader, both 7 and 8. Always remember, if you have 1 or 2 indicators you bought in the past, we will always give you a credit for those against an upgrade. So if you've got a couple of indicators and you want to upgrade to a currency dashboard, or you want to upgrade to an essentials package, or you want to upgrade to a full package, you will always get a full credit for whatever it is you've spent with us prior history. No matter how long that is ago, whether it's years ago or last week, doesn't matter, works in the same way. This is the Forex program over at Quantum Trading Education. I know we have some of our students on this call at the moment. It's a complete program. That's really what it is. It covers everything you need to know to trade Forex. And in addition to that, you've got the funded program. You trade our money up to $2 million. It's as simple as that. And we put that program in place to give our students the opportunity to really put their knowledge to the test and trade big sums of money. You start with 5, 10, or 15,000. We then multiply that by 4 once you go through the first level of evaluation. You go up to 60,000 if you started at 15, and then 120 and 244.80 on up the ladder. Finally, Anna's site, annacooling.com, you can find all the books there. They're all up on Amazon, they're in Kindle, they're in paperback. I have to say they sell extremely well. And we get some wonderful comments on Twitter, which is very heartwarming. Despite the odd review that we do get, as Anna said about the stock book, this one, it does say over 200 worked examples. So, you know, we do try and explain what's in the book, but perhaps he didn't read that bit of the book cover itself. Never mind. There are all the links to all the others as well, and you can find them all here on Amazon. The links are there. Hope you've enjoyed the call today. Thank you very much indeed for coming along. We will see you soon. I'll just open the chat box. Sorry, Christopher, had the chat box closed. Always do. When you say particular risks that have been hit multiple times, what time frame are you talking about? They will, to whatever time frame you have the chart set to. So if you have it on 5 minute, 1 minute, hourly, daily, weekly, whatever, it will display all those particular levels that have been tested or retested in that particular time frame. So whatever time frame you have the accumulation distribution indicator on, it will display those particular levels for that particular time horizon. It has a look back on it. You can alter that look back if you wish. Clearly the levels that are important are the ones that it's trading in at the moment. I mean, if you wanted to see all the various levels forever, then yeah, you know, we always have to balance computer processing time or optimize processing with displaying the information. So we can't go back to year dot. So everything has a look back period, which you can adjust yourself on the indicator. But other than that, it works in all time frames, and you know, it's just a really strong intuitive indicator to show you everything that's going on in terms of the current price action. hope that answers that one. And we will see you again soon. Enjoy the rest of the trading day. Stay safe, as always. And we will see you soon. Thanks very much indeed for coming along today. Hope you've enjoyed it. See you soon, and bye for now.